Hi everyone, welcome back. In this video I wanted to give an updated technical analysis of the S&P 500 and give my thoughts on if this is a new bull run or a bullish pullback in a bear market. So before I jump into Elliott Wave, I wanted to point out some other key technical characteristics. Looking at the daily, for the past 3 weeks we've been bouncing between this support line and this resistance line. We hit this support line twice, and then on Wednesday we hit this resistance line, which also corresponds to the 200 exponential moving average, as well as the 618 Fibonacci level that I drew from the high back in February and the low in March. So obviously this is pretty strong resistance because we bounced off that on Thursday, Friday, and then hit this support level. This was about a 4.5% drop into this support level, which I got from these candles here. On top of that, we broke this ascending trend line that we were hugging for the past 8 days. So after a nice run up into resistance, it makes sense that people would want to take profit where they can, especially after hitting this same resistance line and then dropping here, and then we hit it again here, and then we had a drop here. So the question is this the new bull run and then we're going to have a pullback? Or was this the pullback to a bigger downtrend? To me, fundamentally, I don't see how we could think about making new highs at this point in time. Unemployment is about 30 million. Small businesses and big businesses are getting crushed right now. And we have to remember, Microsoft, Apple, and Amazon are doing fine right now, and they make up a huge weight of the S&P, so they have a big impact on the S&P 500, but other sectors are getting hit hard, and this will eventually impact these companies down the line. On the flip side, states are slowly opening back up. This is good news for people to get back to normal and for businesses to pick back up, such as retail and restaurants, and overall start to bring back consumer spending. On top of that, Gilead has said their drug remdesivir has shortened recovery time for some hospitalized patients. So this is all good news, but there also is no vaccine yet, and that will take time. Another point is that Powell of the Federal Reserve did say the virus needs to be under control to resume economic activity, and we're not there yet. Powell also said that the feds will do whatever is necessary to keep the current expansion going. So I mean, if that's the case, then sure, maybe this is a new impulsive wave within the bull run that's been started since 2009. Only time will reveal the answer, so what about now? Perhaps Elliott Wave, along with other technical indicators, can help us see where the market is headed in the short term. In my last video regarding the S&P 500, I had mentioned that there are two main theories out there regarding Elliott Wave for the bull run that started back in 2009. One was that we finished wave 5 here back in February and now have a bigger correction of this 11-year bull run. And the second is that this low back in March was the completion of wave 4, and we might now be in wave 5 to continue the bull run that started back in 2009. I'm still leaning on the fact that I think this is a bigger correction, but I need to have a more open mind and not disregard the possibility that this might be a new impulsive wave up. That being said, what does this mean moving forward? Let's start by looking at this as if this was completion of wave 4 and we are now headed into wave 5, moving up. So if we were looking at this as a start of wave 5 up, within wave 5 we would want to see 5 waves as well. And then within this first wave, we would want to see another 5 waves. And perhaps we've already completed those 5 minor waves inside this wave 1 and are now headed for a correction, which would be wave 2. So if we think that 5 waves have been completed, perhaps a break of this line here would indicate that we are now correcting this wave. But if we do continue to move higher, perhaps wave 5 has not been completed. Maybe it's going to complete somewhere around this resistance line or at the highs. And now we're looking for 5 waves within this smaller wave 5. So if you think that we could move higher, perhaps you could get in at the pullback with the stop here for a move up. Or if you think that we've completed 5 waves, in other words, this is finish of wave 1 of the bigger wave 5, and we're now headed down for wave 2, you could wait for a tiny pullback and get in somewhere here with the stop at this high. Because if we broke the previous high that we made last Wednesday, this theory would be invalid. So those are the two scenarios I have for the bull case if you think that we have still wave 5 to complete and the expansion of the bull market that started back in 2009 still has room to go. And I wanted to share this diagram that has to go with the psychology of Elliott wave. So if we just completed wave 1 of within wave 5, the bigger wave 5, and are now in wave 2, the psychology behind it is that fundamental conditions are often as bad as or worse than those at the previous bottom. And then the underlying trend is still considered down. So at this point, we don't know if we're going up or down. But in this case, if we did have wave 2, we would not want to see it pass the start of wave 1. So that's the psychology regarding wave 2 on the bull case. And then on top of that, I also want to mention that if we do think that we have wave 5 to go, this is the psychology regarding that bigger wave. That the market performance and fundamentals improve, but not to the level of wave 3. So not to the level that we had before this downturn. Now that we know the psychology regarding wave 2, we would want to see the pullback to be around the 0.5 or the 618 Fibonacci retracement plus or minus. We also do have some gaps that, could technically be filled, but not pass the start of wave 1 and still be good for the bullish case. Remember, Elliott wave is waves within waves, so you have to break it down based on the time frame. We might be in wave 5 based on the monthly and weekly. However, on the shorter time frame, we might be just finishing wave 1. I know this stuff can get very heavy when you're trying to wrap your brain around it, but that scenario would probably be, in my opinion, the textbook wave pattern that you're looking for. And I thought it would be good for me to mention something that I noticed back in 2009. So in 2009, we had the big downtrend like we had recently, and we retraced back up to the 618 like we are currently right now. However, once we hit that 61.8% Fibonacci level here, we only had a retracement of 38.2%. Not the normal 50% or 61.8% that we would normally see with the wave 2 in Elliott wave. So this is good to know in the back of your head that we may not have a deep correction that you normally see in wave 2. And depending on price action and the wave pattern within wave 2 would help us better establish how far the pullback is going to go. And again, this was just an example that I thought I would share. I mean, we did have this big downturn here too, which could influence why we, didn't have a bigger pullback here. We can use history to help establish patterns, but remember, every situation is different. Now that we've talked about the bull case, let's talk about the bear case. Let's say we are in a bigger correction of the 2009 bull run. What should we be looking for? So I came up with a few possible scenarios, and again, there are many other combinations that could happen as far as the correction goes. These are just 4 scenarios that I thought I would share. First scenario is that we have a zigzag, and this is A, B, and then we're going to C. However, the problem I have with this one is that it would be too short. After 11-year expansion, just to have like a 3-month correction, I don't know, it seems too short for me. Second scenario is that maybe this is wave A, but wave B is longer. We still have to complete the 3 waves, and then we have wave C, either in a flat or an extended zigzag. Third scenario is that this is just wave 1, 2, and then we still have to finish wave 3, 4, and 5 of just wave A in this correction. And then the last scenario is that what if this is wave A, B, and then C within wave A, and then we're going to just have a longer flat correction or some kind of triangle or some kind of combination. So regardless, with all 4 scenarios, I have that this is a pullback and that we will have to go back down a little bit or a lot. Remember that we did hit resistance this week, and on the weekly chart we do have a shooting star candlestick pattern, so maybe this was the pivot point to go down. So I think if you are looking to go short on the market, you could wait for a minor wave pullback here and then just have your stop the high that we made on Wednesday, which is here at this resistance level. But do keep in mind that break of this line does not necessarily mean that the bear theory is invalid. It just means that we're not ready yet to go down. We just have to put a stop to limit our risk, but we can always wait for the right setup and reevaluate the charts for another pivot point. So out of the 6 theories that I mentioned, both on the bullish and bearish side, they all suggest some sort of downtrend needs to occur. But the question is, at what pivot point is this downtrend going to occur at? With trading, there are a lot of unknowns and anything can happen. So we just have to make sure we have the right exit strategy, but then also ride the wave with a reasonable trailing stop so we can maximize on potential profit. I think for me, I'm looking to at least fill the gaps here, or first target be at least a 50% retracement. Alright, I hope you found this video informative. If you did, please give it a like and subscribe to the channel. Depending on the feedback, my goal is to continue these weekly updates with my thoughts on the S&P 500. And then, as always, feel free to leave comments down below on what you're watching in the market or where you think the S&P 500 is headed. See you in the next video.